Hi, welcome to the Business and Finance channel. In the last few days, you must have noticed what's been happening in the world, and that's the collapse of one of the biggest American banks, Silicon Valley Bank. Let's take a look at why and how it happened. Silicon Valley Bank, SVB, a bank specializing in the tech startup industry, recently collapsed after a bank run as companies began burning more cash. Founded in 1983, SVB was the 16th largest U.S. bank before its collapse, with assets totaling $209 billion at the end of 2022. SVB provided financing for about half of all U.S. venture-backed technology and healthcare companies, which made it a preferred bank for the tech sector. However, the bank collapsed due to a lack of diversification and a classic bank run where many customers withdrew their deposits simultaneously due to fears of the bank's solvency. Many of SVB's depositors were startup companies who deposited large amounts of cash from investors because tech was in high demand during the pandemic. SVB invested a large amount of bank deposits in long-term U.S. Treasuries and agency mortgage-backed securities, which caused its bond portfolio to drop when the Federal Reserve hiked interest rates in 2022 to combat inflation. Additionally, when economic factors hit the tech sector, many bank customers withdrew money as venture capital started drying up. SVB didn't have the cash on hand to liquidate these deposits because they were tied up in long-term investments. When the bank announced its $1.75 billion capital raising on March 6, people became alarmed the bank was short on capital, inducing panic that the bank didn't have enough funds, and customers started to withdraw money in waves. California regulators shut the bank down on March 8 and placed SVB under the FDIC. SVB's collapse is another setback for the tech industry and is the biggest bank failure since Washington Mutual in 2008. Many startups left money in their SVB primary account instead of using other accounts, such as a money market, to pay expenditures, meaning that most of their working capital was mainly in their SVB account, and they needed access to their deposits for payroll and bills. SVB stockholders and investors took a big hit because, unlike customers, they were not backed by FDIC on their investment. Other banks were facing solvency issues, such as Signature Bank and Credit Suisse, but the U.S. government stepped in to protect customer deposits, and HSBC plans to purchase the UK portion of SVB. What does the collapse of SVB mean for the tech industry? The collapse of Silicon Valley Bank is a significant blow to the tech industry, which heavily relied on the bank's services to manage their cash and finance their ventures. The bank catered to half of all U.S. venture-backed technology and healthcare companies, which means its collapse will have a ripple effect on the sector. One of the immediate effects of the collapse is that tech startups and companies that had their funds in the bank will now have to look for alternative banking options. This process can be complicated and time-consuming, which can affect their business operations. The collapse may also lead to increased scrutiny on other banks that specialize in the tech industry. Banks like SVB have been popular among tech startups because they are more likely to offer them loans and financing options, which traditional banks may not provide. However, the collapse of SVB may cause startups to be more cautious when dealing with such banks, leading to a decline in the number of companies that use their services. Moreover, the collapse may lead to a tightening of credit for the tech industry. Banks may become more risk-averse and less willing to lend to tech startups, leading to a decline in innovation and growth in the sector. The collapse of Silicon Valley Bank is a significant blow to the tech industry, which relied heavily on its services. The bank's lack of diversification and a bank run led to its collapse, which will have a ripple effect on the sector. That's all for today. Thanks for watching this video. If you liked the video, we'd love for you to subscribe to our channel for more information from the world of finance and business.